Welcome to Realcast, the weekly roundup of the real asset markets. We're coming live from the BNP Paribas real estate offices here, where we've been having a session looking at ESG and impact, and we'll pick up a little bit on that because that's been one of the major themes across the week. I'm joined by Ron van Bluis and Nicole Dines, and for the first time, Courtney Fingar. Courtney, it'd be interesting just to pick up with you, I guess, what you've been following during the week, and also, I guess, what you're looking forward to, especially with MIPIM coming up.
Thank you. Well, I'm very happy to be joining for this first Realcast, and there'll be a lot more that we'll be talking about in relation to how real assets fit with FDI, or real FDI as I call it. We have a major anniversary, of course, coming up, and that being the invasion of Ukraine coming in the week. And apart from the human and geopolitical implications of that, there have been major FDI implications, of course, with a reallocation of investment. Of course, hundreds of multinational companies pulling out of Russia, Russian companies pulling out of locations, investment destinations that have maybe been trying to court Russian investment, of course no longer wanting it, some still courting it, but quietly. But also the main factor is that it heightened companies' sensitivities towards risk, and they're viewing locations across Europe and indeed even globally with a keener eye to risk aversion. And so we've seen a lot of locations in Central and Eastern Europe rethinking how they're promoting investment, companies rethinking where they might invest, and of course implications of energy security and supply chain security, all factoring into what was already quite a complex equation of where and how investors think about Europe and the world with regards to their outbound investment. So keeping a very close eye on that all the time.
And we've been here talking about ESG. How's that influencing the FDI side as well?
Well, FDI is very much on board with ESG now. You could argue maybe a little late to the party, but arrived at the party nonetheless. And what we're seeing is both in terms of the push and the pull. So companies, of course, having to be really focused on ESG and thinking very more intentionally about how and where they make investments. Companies are paying much more attention to the Sustainable Development Goals, for example, and wanting to play a role. Investors are looking for ESG compliant and SDG friendly investment opportunities. On the pull side, investment promotion agencies are now focused heavily on those types of investments. They're becoming choosier and no longer just wanting to take any old investment. They're thinking whether it fits into their own ESG and SDG goals that they may have. And so there's a will on both sides. There's still, in many ways, a mismatch sometimes with the aims of the investors and the goals of the locations, but they're coming a little bit closer together, and I think that makes it quite a fascinating time in this space.
Yeah, it's interesting. And Nicole, from your side, I guess, what have you been tracking, but also what was your sort of sense of some of the discussion today as well?
But it was a very interesting briefing because it showed there were people from different sectors, and it just shows how ESG is now taken on board, but there's still a big gap between wanting, there's certainly a high level of awareness of what needs to be done, but there's a lot less clarity about how to do it and what exactly to do. And it was also highlighted that one of the problems is lack of skills in the sector. Everyone wants to hire ESG experts, but there are just not many with enough track record, enough experience. But it is obviously a positive that there is such a demand from companies for experts in the field, because everyone is looking out, to hire specialists. Sometimes in individual, components of ESG, environmental side, but also the social and the governance side. And there's obviously a positive sign. Obviously, the demand is there, and things are changing very rapidly because of technology, because of regulatory pressure. But things are not. I think the agreement was that things are not moving in the real estate sector as fast as they have moved in other sector, and that things are moving in the right direction, but the pace has to be speeded up.
Okay, good. And Ron, what's your sort of take on it? Obviously, quite an interesting mix in terms of the audience, people coming from very different disciplines with very different views to share.
Yeah, for sure. I think diversity was key. Well, I think in general it's about alignment and leadership, because we fully agree that we have to create alignment in the value chain to go from a linear economy to a circular business model. It takes a lot of knowledge, measurement, but also leadership to transform the existing stock to a future-proof real estate stock. Valuation is key, but also measurement on the social impact. I think all the audience agreed on the fact that we have a redefinition of value. And so not only having measurements on, well, the financial side, but also what's the value, on which level do we value? And not only on the asset side, but also maybe on the area development side, or even on society side. Because I think that's also the aim of real asset impact, is to create impact on climate change and the built environment. We are for 40% responsible for the carbon dioxide. I'm very positive also when we had like 50 peers, ESG impact and sustainability peers in the room. The energy was awesome. So I'm really looking forward to speed up to this community.
Yeah, that's interesting because I was in Madrid last week at the Iberian REIT conference, and there was quite a lot of focus on particularly ESG, but also actually much more positivity than I expected in general around the market. The question that my panel addressed was, is there Armageddon in real estate markets? But actually by the time we got to the panel it was very clear that there wasn't. And in fact, although in the listed side the stock market valuations are low, actually from the fundamental side, revenues are good, increased occupancy, increased rents. So from that perspective, very different to the sort of Portugal and Spain from the previous crisis. Yeah. Also had an interesting discussion with Audrey Klein, who was at the AFAR conference in Washington DC, and there was, for the first time, there'd been two panels specifically focused on ESG and carbon reduction. So really interesting to see how that's been developed. Thanks very much, Ron. Thank you, Courtney. Thank you, Nicole. Thank you for joining us, and look forward to seeing you next week in our more regular Zoom-style version. But thanks very much for joining us.